Welcome back to the Dinar Chronicle, your trusted source for the latest developments in the world of global currency revaluation and financial policy shifts. If you've been holding onto Iraqi Dinar, today's report may mark a critical turning point. For weeks now, there have been quiet murmurs, unofficial leaks, and off-the-record conversations surrounding major financial institutions and their preparations for an unprecedented monetary event. But this week, a potential signal emerged from one of the largest banks in the United States, Bank of America, and it has sparked a wave of speculation, cautious optimism, and urgent questions across the Dinar community. The question on everyone's mind: has Bank of America given the green light for the IQD revaluation process? According to multiple sources familiar with internal banking operations, Bank of America has made significant back-end adjustments to its foreign currency infrastructure, specifically regarding the Iraqi dinar. While no formal press release has been issued, these updates appear to include system flagging for IQD rate changes, tiered account designations for potential high-volume currency conversions, and internal memos hinting at policy realignments. What's catching analysts off guard is the speed and scale of these quiet updates, which are now being interpreted as groundwork for a potential revaluation acceptance framework. In other words, these are not the actions of a bank preparing for routine foreign currency trade. They resemble the moves of an institution gearing up for a significant currency event. In previous cycles of RV speculation, it's not unusual to see rumors surface and fade without traction. However, what's different this time is the convergence of indicators from outside Iraq. Central bank analysts note that there is growing alignment between the Central Bank of Iraq and Western financial institutions. This includes matching ledger codes, mirror accounts set up for international settlements, and now the hint of rate testing at the banking tier level. One high-level source within an overseas central bank described the U.S. financial ecosystem as being positioned but not yet activated, suggesting that while the mechanisms for a new rate are in place, the final trigger has not yet been pulled. What's further amplifying attention this week is a set of leaked screenshots allegedly captured from a Bank of America internal training module, referencing IQD revaluation under scenario-based market adjustments. While we cannot independently verify the authenticity of these images, former banking compliance officers have told the Dinar Chronicle that such modules are typically used to prepare relationship managers and branch-level staff for possible future events, including currency conversions at non-standard rates. If true, these modules would suggest that BOA is not just aware of IQD revaluation chatter. They are actively preparing for how to handle it. Another development we're tracking closely is the behavior of Tier 1 wealth clients and private banking groups. Over the past month, there has been a noticeable uptick in IQD-related activity within private client services. Select BOA clients with high net worth designations have reportedly been advised to maintain liquidity and avoid long-term foreign currency holds unrelated to anticipated mid-year events. The timing and vagueness of this language have led many to connect the dots to the dinar. When asked for clarification, bank representatives have declined to comment, citing ongoing market assessment procedures. Adding to the intrigue, international wire protocols involving IQD settlements have recently undergone revisions through SWIFT and alternative payment channels like RippleNet. Financial technology experts tell us that in order for a currency like the dinar to be recognized globally at a new rate, settlement systems must first accommodate the new valuation structure. What this means in plain language is that the technical rails needed for Iraq's currency to be traded at a higher, asset-backed rate may already be in place, and not just in theory. In multiple testing environments, simulated trades have been conducted using IQD pegged to values above $4.75, although these transactions are not yet live for public exchange. The bigger picture involves Iraq's ongoing moves toward economic reform and stability. In recent weeks, the Central Bank of Iraq has made public statements regarding the reduction of dollar reliance, the introduction of gold reserves to support the national currency, and a renewed push for transparency in banking operations. These are not isolated headlines. When seen together with BOA's internal updates and increased regional banking coordination, a pattern emerges, one that suggests we may be witnessing the final stages of preparation before a major financial shift. In Washington, D.C., lawmakers on the Financial Services Committee have been receiving briefings about global currency volatility and the risk of black swan events impacting the U.S. dollar. While Iraq is rarely mentioned publicly in these discussions, analysts believe it remains a central consideration behind closed doors. The logic is simple. A sudden change in the value of a foreign currency, especially one previously classified as exotic and low trading, could ripple through U.S. banking systems in unexpected ways. Hence, the need for large institutions like Bank of America to be ahead of the curve rather than caught flat-footed. In terms of market behavior, there's already a growing divergence in dinar pricing between bank-offered rates and street-level market rates in Iraq. This kind of discrepancy historically precedes either a devaluation or revaluation event. However, with the current data pointing toward enhanced central bank reserves, economic growth forecasts, and a resurgence in oil output, the probability tilts toward an upward correction of the dinar's value. Multiple financial research firms now list Iraq in their currency watchlist reports for 2025, marking the first time in years that Iraq has re-entered the radar of institutional investors. What should dinar holders do right now? First, remain calm and strategic. While the rumors surrounding Bank of America's movements are compelling, they do not yet constitute official policy. There has been no formal confirmation from the U.S. Treasury Department, no public statement from the IMF, and no live update to the Forex market listing a new IQD/USD pairing. That being said, the volume of credible activity behind the scenes strongly suggests something significant is developing. If you're holding physical dinar, ensure it is properly stored, authenticated, and recorded. Now is not the time to panic sell or over-leverage positions. We are in a wait-and-watch period, but one that increasingly feels like the final countdown. It's also worth noting that conversations among international redemption centers have intensified. Facilities in Texas, Florida, and parts of the Midwest have reportedly undergone technology updates and added security protocols, often used in high-value asset transactions. While the term redemption center is still avoided in official documents, insiders refer to these locations as transaction centers for monitored exchange. The language may differ, but the operational intent appears aligned with RV readiness. In recent updates from Iraq itself, Finance Ministry officials continue to express confidence in Iraq's growing ability to stabilize its currency and expand trade agreements with neighboring countries. With new digital payment systems rolling out across Iraqi banks, cross-border payments are expected to accelerate in Q3 of 2025. This momentum further supports the thesis that Iraq is preparing its economy not just for recovery, but for international financial reintegration, an essential condition for revaluation. Market reaction remains muted for now, primarily because no bank has made a public pricing adjustment. But insiders believe this may be part of a deliberate strategy. Prepare internally, finalize settlement rails, confirm international alignment, and then release the new rate during a low-volatility trading window. If correct, this would mean the public may not receive much advance warning beyond leaked memos and behind-the-scenes confirmations like those now surfacing from Bank of America.